A slowdown in UK growth highlights the challenge facing Britain's Labour government. Welcome to Market Insight, I'm Thomas Warner. The UK's new finance minister says that she wants the UK to have the fastest per capita GDP growth in the G7. It did during the first half of this year, but growth in Q3 of just 0.1% and an unforecast contraction in September suggests that it may be a tough road back to the top, especially with the US economy heating up nicely. Well, with me to give her thoughts on Friday's data is HSBC's senior UK economist Liz Martins. Liz, a very warm welcome to you. Firstly, how surprised were you by today's numbers?
Well, I think in line with the consensus of economists, we were expecting a slightly higher number, 0.2% quarter on quarter for the third quarter. Of course, it came out at 0.1%, as you said. So we're a little bit surprised to the downside. But more broadly, we always thought that perky pace of growth that you alluded to from the first half of the year, 0.7 in Q1, 0.5 in Q2. We always thought that was a little bit unsustainable. Don't forget that was coming off the back of a recession in 2023. So a lot of that was kind of bouncing back. So we always thought that was a bit unsustainable. But within that context, this number was disappointing.
So what was the reason for it being so disappointing?
Well, I think a couple of things. I think confidence has fallen back over the summer. We've seen consumer confidence fall. We've seen a few business surveys suggesting they're feeling less confident. And then the other thing is, I think part of the strong growth in the first half of the year was fueled by expectations that inflation was kind of vanquished and interest rates were going to come down quite quickly. And the markets have repriced their expectations as we've moved through the year. So the markets now expect less interest rate cuts from the Bank of England. And again, that feeds through to less business confidence. So I think it's a combination of those two things.
Let's focus now on that stated objective of getting back to the top of the G7 growth league table. We know that the US economy is now looking extremely punchy. It's been on a big bull run since last week's presidential election, and the signs are that there's going to be a lot of deregulation, etc. So surely regaining top spot in that growth table is now extremely unlikely.
Well, I won't use quite those words, but it's certainly a stretching target for sure. Look, the US economy has been an outperformer in the whole of the post-pandemic period. You look at the charts, you compare US GDP or US household spending to us here in the UK, and it's really, really striking how much it has outperformed. And as you say, with the result of the election, that might lead to some tax cuts, some deregulation, and that might generate some additional outperformance. So I would agree that it's hard for the UK to top the table, given that actually confidence is a bit low here at the moment, and we don't have those same big drivers of growth.
And Liz, we did see Rachel Reeves talking about some potential deregulation here in the UK last night. She was speaking at Mansion House. Is that where you think Labour need to focus their efforts in order to at least make some progress?
Well, I think it's positive as long as it's not leading to excessive risk-taking, of course. I think, look, we do need to see some productivity, and deregulation can be a part of that story. And I think the government has a number of strands, actually, to its policy to try and increase the growth rate. Deregulation, financial services, pensions reform is one of them. Another, of course, is the big house building programme. And there are other bits and pieces as well. So I think, the government is right to be focusing on growing the economy, and it has some ideas along the way.
So we are around halfway through the current quarter. A lot of the potential positives that you've just outlined there are slightly more long-term, aren't they? So do you see any immediate bounce back in Q4 from those Q3 numbers?
Well, it's difficult. I think running into the budget, a lot of people kind of said to me, well, are the government managing our expectations in order that we'll be pleasantly surprised on the day? And actually, there weren't a lot of pleasant surprises for businesses in that budget. So, some people think, well, at least we know now, we've got some stability, we can move on. The uncertainty around both the budget and the US election is now behind us. So there may be some kind of stabilization from that. On the other hand, the rise in taxation, I think, hasn't gone down particularly well with businesses, and markets have further priced out interest rate cuts from the Bank of England. So I think those will continue to challenge the growth rate.
Well, the Bank of England Governor Andrew Bailey was also at that Mansion House event yesterday. He was making his feelings about Brexit very clear. And we also saw Keir Starmer this week taking the unusual step of spending Armistice Day in Paris. Do you think we're seeing the first steps back into the European fold, Liz?
Well, I think, Labour was clear in the campaign period that they wanted to foster a stronger trade relationship with the EU. And I think, they're still our nearest neighbour, largest trading partner, and that is a positive thing. And again, it's one of their ways of looking to increase the growth rate, is trying to rebuild that trade relationship. Now, obviously, the government has laid down some red lines. They're not going to do anything that includes freedom of movement, for example, and that will limit the degree to which this trading relationship can be improved. We're not going back in the single market or the customs union, and so any changes, I think, will be incremental, positive, but incremental.
So much to be keeping an eye on, Liz. Thank you very much indeed for your time today. And that is Market Insight. Don't forget you can watch more videos on Reuters.com.